Let's get an early look at what to expect at the open on the local market. Cameron Peacock joins us now from IG Markets in Melbourne. Cam, good to see you there. I mean, the SPY's sitting up slightly, 0.3% there. What's your call for the open for the ASX 200?
Yeah, good morning, Bridie. Look, after starting the week with those positive gains yesterday of 1.2% to close at 42.72, we're looking at a fairly subdued start to trading today. We're currently calling the market up just 5 points or 0.1% around that 42.77 level. Overnight, of course, we had the US markets posting modest losses, really consolidating those strong gains from Friday. They did drift into the close, but still managed to finish up for the session and are now trading at 3-month highs. So we had the Dow and the S&P up about 0.2%. We had the Nasdaq up about 0.7%. We also had European indices having reasonable sessions. They're trading at around 4-month highs now. We saw the FTSE up 0.4%. We had the DAX up 0.7%, the CAC up 0.8%, the Spanish IBEX up close to 4%. Those markets really sort of continuing to ride that optimism that the ECB is cobbling together a plan to recommence its bond purchase program that, is really going to hopefully target those short end of the yield curves for some of these troubled nations. So, as a whole, I think the market's now in a bit of a consolidation phase. It's probably in a wait and see phase, likely to tread water over the next couple of weeks, I think, until we actually get some definitive policy action from the ECB and the Fed. Both laid the groundworks last week for accommodation in the next 4 to 6 weeks, and I think the market is really just going to tread water and wait and see what comes from that. But the expectations are certainly running high. Last night we did have a slightly weaker US dollar. We had stronger commodity prices. We've got BHP's ADR this morning called up about 0.9% around that 32.28 level. We had crude prices about 0.9% higher, again benefiting from that weaker US dollar. So materials and energy names likely to support the market today, but all in all, I'm not expecting an overly exciting session. I think it will be fairly subdued. Obviously, we've got the big data point today at 2:30 being the RBA rates decision. Expectations are that rates will be on hold at 3.5%. I think everyone is going to be dissecting every word and every paragraph of the statement, looking for those clues as to what the RBA might do next. But I suspect they are going to sit tight for the time being. Retail sales last week were a little bit stronger than expected. We've got inflation well in check. I think the RBA has certainly got scope to cut rates further if they choose to do so, but I think they're going to opt to keep a couple of bullets up their sleeve and just wait and see how things evolve over the next couple of months, and particularly wait and see how the market responds to inevitable stimulus from the ECB and something possibly from the Fed in mid-September.
Just looking through the currency markets, we've seen the euro continue to strengthen, going above $1 at 24 US overnight, and the Aussie holding just ever so close to that $1.06 US mark. What do you see? I mean, where do you see those currencies going from here, given the RBA decision today?
Yeah, look, I think it's there's a lot of these currencies are being pulled in different directions. I mean, you've got stimulus programs from certain central banks, which are obviously designed to weaken their currency and encourage growth. But you've also got the risk appetite and yield consideration to throw in. I mean, the Aussie dollar, trading close to 106 last night. I think it got to 105.90. A lot stronger than what a lot of people would have thought. But I think it is really benefiting from that yield advantage at the moment. And I think most people see the RBA as being on hold at the moment, whereas you've got the US and the ECB, those central banks, with slight easing biases, and so that's only going to accentuate the yield advantage that the Aussie dollar holds over these other currencies, and hence it's benefiting from that at the moment. Also, if you do get a bit of a rally in equity markets, as we have seen in the last couple of days, you get that risk appetite flowing through, and those risk currencies like the euro and the Aussie tend to benefit. So, I'd expect the Aussie to hold around these levels for the time being. If we do get some definitive central bank action over the next couple of weeks, despite the RBA being on hold, I think the Aussie dollar can push a little bit higher. And I think the euro, there's some huge short positions in the euro, and I think with Mario Draghi coming out and suggesting that more stimulus is on the cards, the worst case scenario of a euro breakup has been taken off the table. I think some of those euro shorts have been closed in recent days, and I'd expect the euro to maybe just tread water around the current levels for the time being.
Thank you so much for that, Cam.
No worries. Thanks, Brian.
Cameron Peacock there from IG Markets. And